Welcome back to a brand new video. In this video I'm going to show you how to use impulse and corrections in conjunction with supply and demand zones. This is going to be a simple video for you to understand why it is very important to learn Elliott wave so that you can use it with supply and demand zones. You might be asking yourself a question, why is this so important to learn Elliott wave? It is very important because you will be able to understand the market in a wave form, not the structure way. Using the waves, you will understand that the market moves in waves and you will know when to wait and when to enter the market properly. So let's begin. As you see from this example here, I'm not going to touch on it right now, but I want to show you an example of the analysis that I made before on gold. Let's move on to our private Discord. This is our private Discord channel. As you can see, from the 18th of September, I made this first analysis. Okay, I saw that this move here is very impulsive, meaning that the move to the upside is very strong here, but the market has corrected here. Right now the market is very impulsive, but right now we are still in a correction, but this correction was not even complete. So what I have noticed when I move on to the lower time frame, you can see this is the weekly time frame here, and then I noticed that here the market is still trying to push to the upside, but the correction is still not complete. Then that's when I made this analysis over here. You will see clearly that the market moved to the upside a little bit and then dropped lower and started to move higher from this exact point. I'll even show you how I made at this point to be so important to me on this analysis, and it's pretty much simple. So another thing that you can do, if you focus mainly on this pattern alone, you can make some insane profits while minimizing your risk, because it happens a lot of time. But if you practice this pattern, you will understand that this pattern, it always appear on the market every week, but once you understand it, you will find it very easy to spot it even before it completes. So from here guys, you will understand the importance of this area and then the importance of this correction plus this impulse. So from here, just memorize this, but we will move on to this real chart example when I show you how I made this analysis. So firstly, let's start by this area here. We can see that we have an impulse to the upside. This is the main impulse here. This is the main impulse. After every impulse, there should be a correction, meaning price will move opposite direction to the impulse. As you can see, we have a bullish impulse, then the expected correction will be a bearish trend. So from here, even inside this correction, you'll still see some impulses and correction, impulses and correction. So from here guys, you can still sell around here to catch this move and try to sell again to catch this move, because as traders, we don't want to be in this kind of situations. If you are in a trade like this that is moving so slow, you are most likely to be stopped out. Okay, so the main point is to catch the impulse, because we want to see profits immediately. That's how our brains are programmed. So from here, you can still sell here and sell here. But remember, this is a full correction of this impulse. The correction of this impulse will be in this kind of form, so that you can expect the market to move to the upside in the near future. But another thing that you have to notice is that here I'm only explaining with a wave theory. Then what if you include supply and demand, because you don't know where you are going to enter around this area? That's when you should find this kind of pattern in the beginning of this impulse here. So from here, what you have to identify is the last bearish candlestick, the last one around this area. You have to identify it around this area. That's where you are going to enter the market using it on this side here, so that you can catch this move. And another thing that I want to point out is that after this impulse, the market will correct, and then the market will make another impulse the same as this one or even stronger. It will depend if you are still in the first beginning of the wave or in the third one. So from here guys, if you spot this kind of candlestick pattern here, you have to analyze it. You can try to enter when the market touches this area here, or you can wait. Let me show you. Or you can enter when the market comes to this area. You can wait for the market to make a confirmation candle so that you can enter and and then put your stop loss below the demand zone. So it's pretty much simple to understand this kind of pattern. So the first thing that you need to do, let me show you again from this area. The market will move like this to the upside. It won't be a straight line like this, but it will be something like this. Okay, this is your impulse here. On this area, on the side, when this impulse has ended, you will realize that the market will start to be slow. It will do something like this. This is your correction on the side of the market. Okay, this is your correction. So then you will identify your demand zone around this area. This will be your demand zone around this area. So that means if you identify an impulse on the side and then a correction on the side, you have a high chance of winning this trade because you are entering at the lowest point of the previous impulse. So you'll be able to catch this move around this area with little bit of risk. Okay, and then for those who don't understand the bearish side of the market, it's still the same, guys. It will be a bearish impulse like this, and then you will have a bullish correction. Still the same structure as the previous one, but you have to understand it properly. This move here will be very slow. This one may take, this one here in this area may take up to 2 days. It depends on the time frame. And then this one may take up to a week or so. Okay, and then your aim is to catch this area here. If you catch this area, just know that you must target this low here, this one here, and sometimes it can break this one and still correct again and then drop lower again. And sometimes the correction here can still be deeper as something like this, to come at this area, to retest this area again, and then drop lower one more time. I hope I'm not fast because I have like more than 30 days without uploading, so bear with me. I was so busy with some other projects. So from here, if you understand this properly, the market will become so easy. So another thing that I want to point out is that, let's say you have a bearish impulse like this one here, the market can still do some silly moves. Can be like this. You might be asking, hey bro, can I still enter the market going to the upside to complete this correction? Yes, you can still enter the market going long from here, because this point right here is the starting point of this impulse here, and then this one here is your correction. So you can still enter here, wait for the market to push to the upside, correct again like this, and then you can still enter more around this area like this. But then remember, right now you can see that the market is very slow on the side. So that means right now you will be trying to sell the market on this area, because we are on a bigger wave to the downside right now. So that means you'll be trying to trade this move to the downside right now. Okay, I hope you understand it. You must know where you are in the market before you can enter a trade, because this can be a little bit challenging for some of you guys. So another thing that I want to point out, let me think, is that in this area here, let's say maybe you have a confirmation candle around this area, you can still move on to the lower time frame to minimize your risk even more, or maybe find your break of structures and so forth. Anything that you do just to minimize your risk to enter this trade to the downside is still possible. So let's move on to the gold analysis. I have made that analysis, I think, around this area here. Let me do something like this. The market was like this. Okay, this is the daily time frame. As you can see from here, let me move on to the weekly time frame. We can clearly see that this move right here is very strong. We have like few candlesticks. We have like 1, 2, 3, 4, 5, 6 bullish candlesticks that are very strong to the upside. But on this side here, the market is very slow. So that means this move here is still in control. So the market is likely to come here and then move to the upside. This analysis is not even done yet. The gold will still move to the upside very strong, but we don't control the market. Okay, we'll never know. So from here, moving on to the daily time frame, we can see that, okay, this move is not stronger than this one. This was very fast. This one here is a correction. You can see that. Change this color. You can see that the market moved to the downside almost aggressively, but not that strong. Then the market started to correct around this area here. So that means this move here will still push the market to the downside following this correction, and then after here the market will move to the upside, because we are still in a correction for this impulse here. So that means we will have a move like this, and then we will look to go long around this area. I hope this is not complicated, but I'll try to make it simple. This is the simplest way to talk about this pair here, but let me move on. And then another thing No. And another thing, this area here was aligning very well with the trend that is coming here to make another bullish trend. Let me show you. So from here, to find where the market is likely to reverse, you have to find that last bearish candlestick. And that bearish candlestick, guys, is not this one alone, it's this one too. These two bearish candlesticks is where the market is likely to reverse. Because if we move on to the 2 days, this candlestick might be even clear. Let's check. You can see. So the market is likely to reverse around this area. So I knew that, okay, gold is likely to come to the downside first before it can move to the upside ever again, like this, because we are still in a correction here. So you can see that this is pretty much simple to understand, but you don't have to make it so difficult. And another thing that made me to think that gold will move to the upside from here is that we still have a fair value gap around this area from here to here. So you can see that the analysis is not even that difficult. You have to understand impulse, correction, fair value gap, and then a demand zone around this area here, have a demand zone, and then this analysis is done. And then the rest is just to make your analysis to be full so that you can understand it properly. Maybe something like this. Yeah, this is how simple it can be. So going forward from this analysis, we can see that I said that gold will move to the upside slightly, drop lower, and then move to the upside using these bearish candlesticks here. This is where I noticed that the market will move to the upside from here. Someone will say, oh, your trend line is not even aligned. No, bro, it's because you don't know how I made this analysis. Because right now that you know, you will understand why I did this. You can see that this trend line is not even touching anything because I have combined Elliott wave plus supply and demand zone to make this more efficiently for me. So for those who want to join our private Discord, please contact me. Only the admin in here, only admin in the public group, only admin. And I will never text you to sell you anything, okay? If anyone texts you with my username, please don't even respond to that. That's not me. Okay, so from here, guys, that means this analysis is done. Let's move on to the daily because we already know where the market is likely to reverse. So let's move on like this. Okay, we can see that right now when the market came to this area, it made a bullish candle because we already know that the market is likely to move to the upside. You can still move on to the lower time frame to better minimize the risk of this setup. Let's move on to the 4 hours and see. We still have the same demand zone around this area. You can still say that the market broke the structure around this area. Let me show you. Market broke the structure here. You can see it was moving like this, like this, like this, and like this. This is a sign of a bullish presence in the market. You can see that these moves here are very strong after this ones here. So that means the market is likely to correct and move higher. But I'm not sure if the market did that in this time frame. Let's see. You can see it was very, very aggressive to the upside. So if you missed it, I don't know from there, guys. So you can see, you can still minimize the risk because you already know. Moving on to the 1 hour, you can still see that the market was a little bit messy, but you could have missed this trade very, very easily if you were not trading on the daily time frame or even the 4 hours. And I know some of you guys entered around this area. Someone entered here. Stop loss was around this area. It's just that I don't have that screenshot in my device, but I'll share it with the public Discord. So another thing, I think gold will still move to the upside from here. Let's move on to the daily again and see where the market is at right now at the current price action. You can see after this bullish candlestick here, look, gold is still bullish. This move here, right here, guys, is not very strong. You can see those people who trade trend lines, they are getting out of this. They are getting out and then they will just see gold moving to the upside very, very aggressively. So from here, just wait for another correction and then to the upside again. Something like this. Another correction here and then a move to the upside. I don't think gold will break this low anytime soon. Okay, so guys, I have missed you a lot. I think this analysis or this breakdown has helped you a lot. Please go and backtest and also make sure that you subscribe and like the video. I was so busy in the previous weeks with my exams, so I am back right now. So please enjoy your weekend and your trading week. I'll see you in another video.